right, so let's dive into Target
Okay.
and their latest earnings report.
Yeah.
We've got their Q3 2024 report right here.
All right.
And we've also got some analysis from JP Morgan
Okay.
to kind of see how this retail giant's really doing.
Cool.
The really interesting thing here is that Target seems to be kind of stumbling, while Walmart is absolutely thriving.
Right.
So what is going on here?
That's a great question.
Yeah.
It's not like the entire retail sector is tanking.
Right.
So there must be some specific factors that are affecting Target.
Exactly. So to get to the bottom of this,
Yeah.
we've got that Target Q3 2024 earnings report.
Okay.
And then we've also got some comparative context from Walmart.
Okay. Cool.
So let's start with the headline.
All right.
Target missed Wall Street profit forecasts.
Yeah.
And not by a little.
Oh.
They came in at an EPS of $1.85 against estimates of $2.30.
Oh, wow.
That's a pretty big miss.
Yeah.
What do you think?
Definitely not the kind of news that investors want to see.
Right.
And what's even more concerning is that they actually slashed their full-year guidance after they had just raised it last quarter.
Wow.
So that's a big red flag.
Yeah.
That suggests they're a lot less confident about their prospects than they were a few months ago.
Especially when you contrast that with Walmart.
Right.
Which absolutely crushed expectations during this same period.
Totally.
Their comparable sales, their online growth,
Yeah.
and their overall outlook are all looking really strong.
Yeah, they're doing great.
Yeah, it makes you wonder if Target is facing some unique challenges that Walmart's managed to avoid.
Right. That's what we need to figure out.
Yeah.
One thing that Target execs have pointed to is cautious consumer spending, particularly in discretionary categories, like home goods.
Cautious consumer spending.
Yeah.
What does that actually mean?
Yeah.
Like, what does that mean for people's shopping habits?
Yeah.
Are we talking about people putting off, like, buying a new couch, or is this something more widespread?
It seems to be hitting those non-essential categories the hardest.
Gotcha.
So think about things like
Yeah.
decorative items, furniture, kitchen appliances,
Okay.
things that people might be willing to postpone buying if they're feeling uncertain about the economy.
So like those little treat-yourself purchases that people might cut back on when times are tough.
Exactly.
Yeah.
And there are a few factors at play here.
Okay.
We've got recession fears looming.
Right.
Inflation still eating into people's budgets.
Yeah.
And there's overall economic anxiety, which is pretty high.
Yeah.
So all of that contributes to people
Right.
just being a bit more careful with their spending.
People are probably thinking twice before splurging on like a new rug
Yeah, exactly.
or that fancy coffee maker. But isn't everyone dealing with these economic issues?
You would think so, right?
Yeah. So why is Target
Yeah.
seemingly more impacted than Walmart?
Well, I think it comes down to a few things.
Okay.
First, Target's customer base
Okay.
might be more sensitive to these economic shifts.
Gotcha.
Perhaps they're more likely to be impacted by inflation or, you know, job market volatility.
So it's not just about the overall economy.
No.
It's about who their core customers are
Right.
and how they're being affected.
Exactly.
Okay.
Second,
Yeah.
Target's product mix might be more heavily weighted
Okay.
towards those discretionary items.
I see.
Walmart, on the other hand,
Yeah.
with their focus on groceries
Yeah.
and everyday essentials,
Yeah.
they might be capturing more of that essential spending
Right.
that's a lot less likely to be cut back.
That makes sense.
Yeah,
People still got to eat,
Exactly.
even if they're delaying that home renovation project.
Exactly.
Right.
And so on top of that consumer caution,
Okay.
Target's also grappling with another big issue,
Yeah.
excess inventory.
That jumped out at me from the report, too.
Yeah.
And, you know, a lot of people might not realize how big of a deal excess inventory is
Right.
for a company like Target.
Yeah.
It's not just about having a few extra items in the back room.
No, it's a significant financial drain.
Right.
Every unsold item that's sitting in a warehouse
Yeah.
costs them money,
Uh-huh.
both in terms of storage costs
Okay.
and the risk that those items
Yeah.
become obsolete or just less desirable.
Right.
And it puts pressure on them to offer deeper discounts, which
Yeah.
can eat into their profit margins
Oh,
or
yeah.
even lead to price increases later on
Yeah.
if they need to recoup those losses.
It feels like Target's been having more sales
Yeah.
and clearance sections lately.
Definitely.
Maybe that's them trying to move some of that excess inventory.
It's certainly possible. That's one of the most visible signs
Yeah.
of this challenge that they're facing.
Speaking of challenges,
Yeah.
they're also facing this upcoming holiday season
Right.
with what they're calling a conservative approach.
Uh-huh. Interesting.
What's your take on that? Are they right to be cautious?
Yeah.
Or could they be missing out on opportunities?
Yeah. It's tough.
Like, what if the holiday season turns out to be better than they expect?
It's a tough call.
Yeah.
On one hand, the current economic climate does warrant some caution. Consumers might be more careful with their holiday spending this year.
Especially considering the hit they've already taken on discretionary spending.
Exactly.
Like those home goods we were talking about.
Right.
If people are already cutting back there,
Yeah.
they might not be as eager to splurge on holiday gifts.
Exactly.
Right.
But on the other hand,
Yeah.
if Target's too pessimistic,
Right.
they could miss out on sales if the holiday season turns out to be stronger than they anticipate.
Makes sense.
Yeah, so it's a delicate balance between managing risk and capitalizing on opportunity.
And to make things even more complicated, the JP Morgan analysts seem to think that Target is facing some unique headwinds this year, particularly in terms of the promotional environment. Can you unpack that a bit?
Sure.
Like, what does that actually mean for their strategy?
Well, promotional environment refers to the level of discounting and promotional activity that's happening in the retail sector.
Okay.
And what the analysts are suggesting is that this year is particularly competitive.
Okay.
Everyone's vying for those cautious consumer dollars. So the pressure to offer deep discounts and to run aggressive promotions is higher than usual.
So basically, Target's caught in a pricing war.
In a sense, yes.
Okay.
They can't simply sit back and wait for shoppers to come to them.
Gotcha.
They need to find ways to stand out and offer compelling value in a very noisy marketplace.
And that's especially tough
Yeah.
when you're already dealing with the inventory issues
Yeah.
and a potentially hesitant consumer base.
Exactly.
Right.
It's a challenging situation all around.
All of this is reflected in Target's stock performance, which has been pretty lackluster compared to Walmart.
Yeah.
Target stock is up a mere 9%
Wow.
year to date,
Okay.
while Walmart's is boasting a 64% increase.
Oh, wow.
That's a huge difference.
That's huge, yeah.
It speaks volumes about investor confidence or lack thereof.
Right.
The market seems much more bullish on Walmart's prospects than Target's.
Right.
And the JP Morgan analysts seem to agree. They're suggesting that Target's valuation might remain constrained in the near term.
Interesting.
Constrained doesn't sound good.
Nah, not really.
Basically, they're saying that investors aren't convinced that Target's going to turn things around anytime soon.
That seems to be their assessment. They're looking at the missed earnings, the inventory issues, the cautious outlook for the holiday season, and they're not seeing a clear path to a quick rebound.
So we've talked about the challenges, the context, stock performance, and the analyst perspective.
Yeah.
But to really understand what's going on here, I think we need to dig into some of the key metrics from the earnings report.
Sounds good.
What numbers should we be paying attention to?
Well, let's start with comparable sales growth.
Okay.
This metric tells us how much their sales have grown or shrunk compared to the same period last year.
Gotcha.
And for Target, it's not looking great. They reported a 0.3% increase, which is way below the 1.48% that analysts were expecting.
So even their modest growth expectations weren't met.
No.
Okay.
And just to put that in perspective, Walmart US recorded a 5.3% gain in comparable sales for the same period.
So that highlights just how much Target's lagging behind.
Exactly.
Okay. So we've got sluggish comparable sales growth. What else should we be looking at?
It's helpful to break down comparable sales by channel, meaning online versus in-store. Target reported a 10.8% increase in digital comparable sales.
That sounds good.
Yeah, on the surface.
But I bet there's a catch.
There is.
Okay.
While their online sales are growing, their store comparable sales were actually down 1.9%. So that indicates a pretty significant shift in consumer behavior with more people choosing to shop online rather than in physical stores.
Given the rise of e-commerce
Right.
and the convenience factor.
Exactly.
But what does that shift mean
Yeah.
for Target's overall strategy?
Well, It creates new challenges.
Okay.
They need to make sure that their online infrastructure can handle the increased demand.
Right.
That their delivery and fulfillment operations are efficient.
Okay.
And that their physical stores remain appealing and relevant to shoppers.
So it's about adapting to the changing retail landscape.
Exactly.
And meeting customers where they are.
Exactly.
It's not enough to just have a website anymore.
Right.
They need to create a seamless and engaging online experience that rivals the likes of Amazon.
Exactly.
And then there's also the impact on profitability.
Right.
Fulfilling online orders often comes with higher costs compared to in-store purchases.
Right.
So they need to find ways to manage those costs effectively.
They do.
Okay. So we've got sluggish, comparable sales overall.
Yeah.
A shift towards online shopping and the challenges that come with it.
What
other metrics are giving us insights into Target's current state?
Let's look at transaction volume.
Okay.
And average transaction amount.
Okay.
Target reported a 2.4% increase in transactions.
So that means more people were shopping at Target.
Yes, but
I have a feeling they weren't spending as much.
You're right. The average transaction amount actually dropped by 2%.
Okay.
So even though more people were coming through the doors or clicking through their website, they were spending less on average.
That tells us that consumers are being more price sensitive.
Yes.
And maybe buying fewer items or trading down to less expensive options.
Yes.
It reinforces that picture of a cautious consumer who's more selective about their purchases.
Exactly.
This aligns with everything else we've been discussing. People are feeling the pinch.
Yeah.
So they're making more calculated spending decisions.
Right.
And this trend presents a strategic challenge for Target.
It does.
They need to figure out how to entice shoppers to spend more per visit.
Right.
So they need to make sure that they're offering compelling value, maybe through targeted promotions or by emphasizing their private label brands, which tend to have higher profit margins.
Those are definitely some options they could explore.
But it's not just about enticing shoppers to spend more. It's also about managing their inventory. More effectively.
More effectively, yes.
Which we've talked about, that excess inventory problem.
Right.
And it seems like it's not getting any better.
No, it's not.
Their inventory actually grew by 3% compared to last year.
Okay.
Which means their inventory growth is outpacing their sales growth.
Exactly. It's another indication that they're struggling to match supply with demand.
And excess inventory isn't just a problem for profits.
No.
It can also impact their ability to react quickly to changing trends.
Precisely.
If they're stuck with a surplus of merchandise that's no longer in high demand, they might miss out on opportunities to stock up on items that are selling well.
Exactly.
So it's not just about getting rid of the excess. It's about having the right products at the right time. This is all starting to paint a pretty complex picture.
It is complex.
We've covered a lot of ground already.
Yeah.
But I feel like we're just scratching the surface.
I agree. There's still a lot to unpack here. Definitely. Yeah, it really is a complex situation. But before we go any further, you mentioned earlier that Target's stock performance wasn't great. It's actually worth digging into their buyback activity.
Okay.
They repurchased $354 million of their own stock this past quarter. And they still have a $9.2 billion authorized for future buybacks.
Stock buybacks.
Yeah.
Those always feel a little tricky to me.
Yeah.
Couldn't that money be better spent elsewhere?
Right.
Maybe addressing some of those inventory issues. Or supply chain issues that we've been discussing.
That's a very valid question.
Yeah.
Buybacks can be pretty controversial.
Yeah.
Some people see them as a way for companies to artificially inflate their stock price rather than investing in their core business.
So is that what Target's doing here? Trying to appease investors with buybacks? Instead of tackling the underlying problems?
It's hard to say for sure.
Right.
It could be a strategic move.
Okay.
Betting that their stock is currently undervalued and will rise in the future.
Okay.
But it also raises questions about their priorities.
Right.
Are they focused on short-term gains in the stock market?
Yeah.
Or long-term investments in their business?
That's a question that investors will certainly be asking.
Yeah.
But let's move on to another key metric, their cash position.
Okay.
The report shows they ended the quarter with about $3.4 billion in cash on hand. That's a pretty sizable cash cushion.
It is.
Yeah.
A healthy cash reserve gives them flexibility.
Okay.
It means they have resources to invest in growth initiatives, navigate economic uncertainty, or even make strategic acquisitions if the right opportunity comes along.
So it's not all doom and gloom.
No, not at all.
Even though they're facing these headwinds,
right,
they're not exactly strapped for cash.
They have some financial breathing room,
right,
which is essential in a dynamic retail environment.
Okay, but they also slashed their full-year earnings guidance.
Right.
Which doesn't exactly inspire confidence.
Yeah.
What are they currently projecting for the fourth quarter and the full year?
Well, for the fourth quarter, their earnings per share guidance is between $1.85 and $2.45.
That's a pretty wide range.
It is.
What's driving that uncertainty?
Yeah. Well, a lot of it comes down to the holiday season. It's their biggest sales period, but it's also very unpredictable, especially in the current economic climate.
Yeah, for sure.
So their wide guidance range just reflects that they're not sure how consumer spending will play out.
And that guidance is actually significantly lower than analyst estimates, which were around $2.65. So even their lower end of the range is below what the experts are predicting.
It is, and it's worth noting that their comparable sales projections for the fourth quarter are even more conservative. They're expecting flat growth, which is a far cry from the robust growth they were reporting a year ago.
That's a pretty dramatic shift.
It is.
It really highlights how much the retail landscape has changed in just a year.
Absolutely. The pandemic-driven surge in spending is over, and now they're dealing with a whole new set of challenges.
Okay, and for the full year, they've lowered their earnings guidance to a range of $8.30 to $8.90 per share. That's down from their previous guidance of $9 to $9.70.
Okay.
So they're essentially admitting that they don't expect to hit those earlier targets.
It's a realistic adjustment based on their performance so far this year and their cautious outlook for the remainder of the year.
So the numbers aren't exactly painting a rosy picture.
No, they're not.
But we've also talked about how there's more to this story than just the numbers.
There is. Numbers tell us what happened, but they don't always tell us why.
Okay.
To really understand Target's situation, we need to look at the bigger picture.
The bigger picture being those broader economic trends, the shifting consumer behaviors, and Target's strategic response to all of it.
Exactly. And perhaps most importantly, we need to consider what all of this means for us, the consumers. How might Target's struggles and the broader retail trends we're seeing impact our shopping experiences?
That's the question I'm most curious about. Are we going to see changes in stores online or even in the overall vibe of Target?
I think we will.
Okay.
I think Target is trying to walk a very fine line right now.
Okay.
They're trying to balance cost control with maintaining that customer experience that they're known for.
Okay, so walk me through this balancing act.
Okay.
What specific changes might we see?
Well, on one hand, they need to manage that excess inventory and become more disciplined with their promotions. We might see fewer of those tempting sales and clearance events that Target's been known for.
So maybe fewer impulse buys?
Possibly.
Fewer treat-yourself moments?
Maybe they might shift away from that treasure hunt atmosphere and become more focused on core products and essential items.
But on the other hand, they can't completely alienate their core customers who are used to a certain level of value and experience.
Exactly. So they need to find that sweet spot where they're controlling costs without sacrificing the brand image that's made them so successful.
So they're in a bit of a tight spot.
They are.
Cut costs too much. And they risk losing customers. But don't cut enough. And they continue to struggle financially.
Exactly. And remember those unique headwinds that the JP Morgan analysts mentioned. The current promotional environment is incredibly competitive. Everyone's discounting like crazy to attract those cautious consumer dollars.
So Target can't afford to just sit back and wait for things to improve.
No, they need to get creative. maybe even a little daring with their strategy.
Okay, I'm intrigued.
Yeah.
What kind of daring moves could we see from Target?
They've already hinted at focusing more on their private label brands.
Okay.
Think Good and Gather for groceries.
Yeah.
All in Motion for activewear.
Right.
And Threshold for home goods.
Yeah, those have become really popular.
They have.
Yeah.
And they offer higher profit margins for Target.
So by promoting their own brands more heavily, they can potentially offer competitive prices while also boosting their profitability.
It's a win-win,
right?
At least from their perspective.
Right, exactly.
It allows them to control costs, build brand loyalty, and potentially offer more unique products that you can't find anywhere else.
Smart move.
Yeah.
What other strategies could they explore?
Well, they might experiment with more personalized promotions using data and technology. 2, tailor offers to individual shoppers based on their past purchases and browsing history.
So instead of like a generic 15% off everything sale, we might start seeing personalized discounts on the specific things we're most likely to buy.
Exactly. It's a way to make shoppers feel seen and valued, and it can be really effective at driving sales.
But it also feels a little Big Brother-ish, you know? Like they're tracking our every move.
There's definitely a privacy aspect to consider.
Yeah.
But personalized marketing is becoming increasingly common these days.
Yeah.
And it's something that shoppers are going to have to grapple with.
Yeah, it's the trade-off we make.
Exactly.
For convenience and personalized experiences.
Right.
But let's move beyond pricing and promotions.
Yeah.
What else could Target do to shake things up and attract customers in this challenging environment?
I think we'll see a greater emphasis on experiences, both in stores and online. They need to give people a reason to choose Target over the convenience of Amazon or the allure of other retailers.
So more than just a place to buy stuff.
Yes.
They need to become like a destination.
Exactly.
A place where people want to spend time and have a positive experience.
Think pop-up events, interactive displays, partnerships with local businesses or artists, maybe even workshops or classes. Anything that makes the shopping trip more engaging and memorable.
I can see that being appealing.
Yeah.
Especially for like their younger, much experience-driven customer base.
Right. And don't forget about their online experience. They need to make sure that their website and app are user-friendly.
Right.
They offer a wide selection of products. And they provide convenient options.
Right.
Like buy online, pick up in store, or even same-day delivery for certain items.
It's all about convenience and speed these days.
It is.
Amazon has set a high bar.
Yeah, they have.
And Target needs to meet those expectations.
Exactly. And they'll need to continue leveraging the power of social media.
Right.
Target's already pretty savvy on platforms like TikTok and Instagram.
Yeah.
They're using social media to showcase products, engage with customers, and build a sense of community.
They've definitely mastered the art of influencer marketing.
Yeah.
And creating that Target aesthetic that people love.
And that's a powerful tool
Yeah.
in today's retail landscape.
Right.
It's not just about selling products anymore. It's about building a brand that people connect with and want to be a part of.
So to recap, we've got Target facing a whole bunch of challenges, both internal and external.
Yeah.
They're dealing with inventory issues.
Right.
A cautious consumer, a competitive promotional environment, and the looming uncertainty of the holiday season.
Yeah, but they're not standing still. They're exploring different strategies, like focusing on those private label brands, experimenting with personalized promotions, and creating more engaging experiences for their customers.
So it's like they're trying to reinvent themselves while staying true to the core values that have made them successful.
And that's the key.
Yeah.
They need to find a way to evolve and adapt without losing sight of what makes Target.
Yeah. Oh, Target.
Yeah, it's a fascinating case study, really.
It is.
We've got this iconic brand, Target, trying to navigate this rapidly changing retail landscape.
Exactly.
But what does all of this mean for us, the shoppers?
Yeah.
Are we going to walk into a totally different Target next year?
Well, it's unlikely that they're going to
do a complete 180 overnight.
Yeah.
But I think we can expect to see some subtle shifts in the Target experience, both in stores and online.
Okay, give us some specifics. What kind of shifts are we talking about?
We already touched on the promotional environment.
Right.
They're likely to be more strategic with their discounts and sales.
Gotcha.
Instead of those blanket 15% off everything deals, we might see more targeted promotions. Maybe personalized discounts based on our shopping history.
So a little less impulse buy and a little more thoughtful purchase.
Maybe. They might also shift their merchandise mix, focusing more on those private label brands.
We talked about that.
Yes.
They've got some pretty strong private label brands like Good & Gather and All in Motion. It makes sense that they'd want to lean into those.
It does. Yeah. It allows them to control costs.
Build brand loyalty and potentially offer more unique products that you can't find anywhere else.
So maybe we'll see bigger displays of those private label brands.
Possibly.
Or marketing around them, that kind of thing.
It's certainly possible. They might even start phasing out some of the weaker national brands that aren't performing as well.
So it's all about optimizing their product mix to maximize profitability.
It is.
Okay, so that's pricing and product mix.
Right.
What about the overall shopping experience? Are we going to see any changes there?
I think there's potential for them to get more creative with their in-store experience. You know, they've always been good at creating that Tarzay atmosphere. But they might need to step it up a notch to compete with the convenience of online shopping.
What do you mean by step it up a notch? Like, give us some examples.
Think pop-up shops.
Featuring local brands or artisans. Interactive displays that allow you to try out products, maybe even workshops or classes related to their merchandise.
Interesting.
It's about creating a more engaging and interactive environment that gives people a reason to actually visit the store.
Right, because sometimes you just want to see and touch things in person.
Exactly. And it aligns with that trend we're seeing towards experiential retail. People want more than just transactions. They want experiences.
And what are the online presence? Any predictions there?
I think they'll likely continue to invest in their omni-channel strategy, making it easy for customers to shop seamlessly between their website, their app, and physical stores. We might see more options for in-store pickup, curbside delivery, and maybe even same-day delivery for certain items.
It's all about convenience and speed these days.
It is.
Amazon has set a high bar. And Target needs to meet those expectations.
Exactly. And they'll need to continue leveraging the power of social media. They're already doing a great job of using platforms like TikTok and Instagram to showcase products, connect with customers, and build that Target community vibe.
They've really nailed that whole influencer marketing thing. They make Target seem cool and trendy, which is no easy feat for a big box retailer.
It's not just about selling products anymore. It's about creating a brand that people want to be a part of.
So looking ahead, it seems like Target's at a crossroads.
They are.
They're facing some serious challenges. But they're also exploring some interesting opportunities.
It's going to be fascinating to see how they navigate this next chapter.
It's a reminder that even the most successful companies need to adapt and evolve.
They do.
To stay relevant in today's ever-changing marketplace.
Absolutely.
And for us, the shoppers, it's a chance to be more mindful of our spending habits, to seek out value and experiences, and to support the brands and retailers that align with our values.
Well said. It's an exciting time to be a consumer.
For sure.
Even amidst the uncertainty. The retail landscape is dynamic and full of possibilities.
And on that note, I think we've reached the end of our deep dive into Target's tricky quarter.
We've covered a lot of ground.
We've covered a lot.
From earnings reports to economic trends to the future of retail itself.
That's right. It's been a fascinating journey.
It has.
And as always, we encourage our listener to continue exploring, observing, and questioning the world around them. We'll be back soon with another deep dive into a different topic.
We're looking forward to it.
Until then, thanks for listening.